Hello everybody, it's John Felicity from JP Mortgages. I've got Cheryl with me from Foundation Home Loans. Thanks for coming in today, Cheryl.
Thanks for having me here, John.
Yeah, one of the reasons for this podcast today is to tell you all about Foundation Home Loans and the quirky kind of things they do for me as a broker to help you people out that may have some issues. And Cheryl, broadly, what is Foundation Home Loans all about? What do they do? Where are they in the marketplace?
Okay, so we can help complex cases, self-employed, residential, buy-to-let, portfolios, limited companies. So we can help a whole spectrum of different clients.
So would you say, for those people watching here today, you're like an adverse lender, would you say?
We can do some adverse. It's not all about adverse, but we can do blips. We can look at interest only. We can look at professionals as well on the professional range. So yeah, there's a lot of different things that we can do.
What kind of interest rates are you talking about these days, with rates changing all the time? What would you say your rates are compared to others?
Okay, so we've recently reduced our rates and they're actually going to be reduced again in the next couple of days. So they do start with a 7 at the moment, which broadly speaking, we are there or thereabouts with our competitors.
So these mortgages starting with a 7, correct me if I'm wrong, are for people with complex issues and, you know, income might not be quite right, or there might be a CCJ here or a default.
Absolutely. It could be a CCJ, a default, it could be someone who's got 12 months trading for self-employed. Not all lenders can take 12 months trading, whereas that's something that we can do. We can also look at latest year's figures for self-employed as well as, so it's about talking the case through with your BDM, which I know you do on a regular basis. To go through and make sure that it fits with us.
And in this very trying market at the moment, what are you doing most of? What's coming through your door from brokers like me at the moment?
I would probably say the self-employed side of things, or people wanting to use multiple income streams. So for example, on the professional range, we can look at a GP who's got employed income, self-employed, married to a teacher with buy-to-let portfolio income, and we can do 6 times all of that income up to 85%.
Wow, that's really good. And how would you say you compare to the high street banks? You're a different animal altogether, really, from the high street banks. You're looking for them people that are going to pay slightly higher interest rate, but you're going to get the mortgage for them.
Yeah, absolutely. So obviously if it falls off the high street, then I would say look at us for your next best option. We do score, but it's a soft footprint at dip.
And do you have like free valuation fees and free legal fees for remortgages and things like that?
We do. We've got fees assisted, we've got remortgage only options, so there's various different options for your client depending on what it is that they're looking for. We don't have free legals, but we do have the cashback option. Okay,
so for those people looking in today, what's the kind of severity adverse you'd like? How far do you go with adverse credit? Like, let's talk about CCJs for a moment.
Yeah, so we've got 4 different ranges: F1, 2, 3 and 4. On your F1, there's no CCJs or defaults within the last 36 months, unless, say for example, it's a default for utilities, communications, mail order. We know how quickly they can whack them on. So if it's a default for say £200, something like that, that would still be able to go in the cleanest range. Whereas if you've got 2 unsatisfied CCJs up to the value of £3,000, that's something that would go on the F4 range. And that's where, if you've had a client with IVAs or bankruptcies, they need to be discharged at least 3 years ago. So there's something for everybody across all the different ranges.
Well, thanks for that. And people in general that fall outside of the high street bank, let's say they've both got poor credit files, but no CCJs or no default, that again would fit with you?
Absolutely, so that would go in the cleanest range.
And what kind of interest rate would they be looking at, and also loan to value?
We can go to 85% loan to value, and again it's starting with a 7.
Okay, fine, that's no problem at all. Well, Cheryl, that's great. Thanks for coming in today. You've heard it here first. Cheryl from Foundation Home Loans. She's my business development manager. We do a lot of work with them. If in doubt, give me JP a shout. Thanks for watching.